What if I told you the wrong mortgage could cost you tens of thousands of dollars or even force you to sell your home? It's happening right now across Ontario, Niagara, Hamilton, Toronto, and Ottawa. Families are signing up for mortgage agreements they don't fully understand. And here's the scary part. Banks and lenders aren't warning you about the traps because those traps make them money. Today I'm breaking down the types of mortgages you should never touch in Canada, with a focus on what's happening right here in Ontario. Think about it like this. A mortgage isn't just a loan, it's a tool. But if you use the wrong tool for the wrong job, you can cause serious damage. Imagine using a chainsaw to slice bread. Yeah, it cuts, but it's messy, dangerous, and you'll wish you never picked it up. That's what the wrong mortgage feels like. And Ontario is the epicenter of this issue. Home prices here are some of the highest in the country. Niagara, where I'm based, used to be a more affordable market. But over the last decade, prices have doubled. And that means people are stretching themselves thin to get into a home. Add in high interest rates, and Canadians are desperate to lower their monthly payments, which makes them easy targets for risky mortgage products. Here's why this matters. The Bank of Canada has raised and cut rates multiple times since 2022. Affordability is at record lows, and in Ontario specifically, families are carrying some of the highest debt loads in the country. If you get stuck in the wrong mortgage, it's not just about losing a bit of money. It can mean 5, 10, even 15 years of being trapped, paying way more than you should, and unable to move when life. So here's the plan. We've set the stage, and now we're going to walk through 5 mortgages you should never get, with real examples of how they've hurt Ontarians. And towards the end, I'll show you a safer strategy that actually works. By the end of this video, you won't just know what to avoid, you'll know how to play the game smarter than the banks. So let's dive in. Number 1, the 10-year fixed at the wrong time. A 10-year fix sounds safe. Payments don't change for a decade. But if you lock in during a high rate cycle like today, around 5%, you're overpaying. Picture this, you're in Niagara and you lock into a $500,000 mortgage at roughly 5% for 10 years. 2 years later, rates drop to 4 or even lower. Your neighbor refinances and you're stuck at 5% for 8 more years. That could be approximately $60,000 to $80,000 in extra interest. Money you'll never get back. And breaking it, Ontario's Big 5 banks calculate penalties using the interest rate differential. Penalties can be $15,000 to $20,000 just to escape. Number 2 is the teaser variable rate. This one is sneaky. Lenders advertise prime minus 1.5 and it looks amazing. But after 6 months, the discount disappears and now you're paying prime plus 1%. If the Bank of Canada hikes like they did in 2022 and 2023, your payments can skyrocket. I've seen Niagara families whose payments have jumped $400 a month. That's $5,000 a year. Money that could have gone to kids' sports, home repairs, or even groceries. Number 3 is collateral charge mortgages. Collateral charges are one of the most misunderstood products in Ontario. They're registered for more than your loan amount, sometimes 125% of the value of your home. Banks pitch them as flexible, but here's the catch. If you want to switch lenders later, you're on the hook for full legal and appraisal costs, and that could run around $2,000 to $3,000. It's a trap. You're basically locked into that bank forever. And here's what most people don't know. The Big 5 banks in Ontario push collateral charges all the time without fully explaining them. Number 4, no frills or restricted mortgages. This is the lowest rate trick. You'll see a 4.79% special. It looks better than the 5.09. I get it. But the fine print says that you can't refinance and you can't port if you want to move. And the prepayment options are always very minimal. So if life changes, say you get transferred from St. Catharines to Toronto for work, you can't take that mortgage with you, and the penalty could be $15,000 or more. You would be saving roughly $70 a month, but now you're writing 5-figure checks to your bank when you want to make a life change. Number 5 is interest-only mortgages. This is the most dangerous, which is an interest-only mortgage. With these, you'll never pay down any principal. Your balance doesn't shrink, it just sits there. So 5 years later, you still owe the same amount. And if home values drop like they did in Niagara in 2022, you're underwater. You owe more than what the house is worth. For investors, maybe there's a case. But for a regular Ontario family, it's a financial quicksand. So to raise the stakes, all 5 of these mortgages have one thing in common. They look good up front, but they're designed for the bank's benefit and not yours. Short-term gain for long-term pain. And most Ontarians don't see this until it's too late. All right, now let's talk about what you should do instead. Number one is a safer strategy, a flexible 5-year fixed or hybrid. And for most Ontarians, a 5-year fix is the sweet spot. You get stability, but you're not overcommitted. Some lenders even offer hybrids, part fixed, part variable. It gives you balance, especially in volatile markets like Ontario. Safer strategy number two, true variable with an exit option. Variables can work, but only if you have an exit plan. Look for one with fair penalties or the ability to switch to fixed without any extra fees. That way, if the Bank of Canada cuts rates, you benefit. If they hike, you've got a way out. Strategy number three is work with a broker. This is the biggest one. Don't just walk into your bank branch. Banks in Ontario only sell their own products. And guess what? Most of them are the traps that we talked about. Collateral charges, no frill rates, they all come from them. A good broker works with dozens of lenders. They can explain the fine print, they can compare options, and they make sure you're not chasing the shiny rate at the expense of your future. Mortgages in Ontario aren't designed for you, they're designed for the bank. But when you know what to avoid and which strategies protect you, you flip the script. You turn your mortgage from a trap into a wealth building tool. If you found this helpful, please subscribe. And if you're in Ontario, especially here in Niagara, book time with me using the link below. I'll walk you through your options and I'll make sure that you never get stuck with the wrong mortgage.